MoneyWeb on SAFM, South Africa's news and information leader.
You're listening to the Market Update with MoneyWeb, brought to you by the Right Choice Investment from Discovery Invests. Protech Khuthele, Chief Executive Gerald Chapman, is with us in the studio. Gerald, when you came to the market, you raised 12.5 million rand at 100 cents a share. Your share price went way beyond 3 rand, come all the way back now. You're back to virtually 100 cents again, even though you've had some very good financial results. Looking back, shouldn't you have maybe raised a bit more money when the going was good?
Well, Alec, it's so hard. It's always easy in hindsight. And maybe we should have, although it's not something that we
You didn't need
about.
the cash at the time,
No,
but you are geared now. You have been borrowing to do a few acquisitions.
Yes, we are highly geared. It's not something that worries us too much. We would like in the next year to bring that back to maybe 70%. But, with our model, it's not something that's out of the ordinary.
But you are in a capital-intensive industry. You buy a lot of equipment, you buy new equipment, get rid of it after 3 years. The going was really good when you listed on the JSE. Looking back, there's nothing wrong with making a mistake. Maybe if you'd raised 100 million, today you'd be sitting real pretty.
Yes.
Was it possible? What happened there? Why did you decide not only to go for 12.5? Because it wasn't much in the times.
Yes, I think that was in line with our needs at that time.
Okay. Focus civil engineering business. Are you seeing the boom continuing? Can you see it be extended, the boom in infrastructure?
Alec, definitely in the infrastructure. I think it's a steady and strong spend. There's a lot that has to be done. There's a lot that should be done, but there's a strong spend for work that has to be completed. And when I say has to be completed, I'm not talking about only for the 2010. That's just a peg in the sand. But infrastructure that has to be completed, that's been promised.
Such as what? Government infrastructure, maybe?
Yes, that's right, yes.
And it's interesting to see that you've moved your focus now to mining infrastructure and government infrastructure, or the public sector. Just starting on the mining side, we've seen commodity prices tank. Have you seen any cutbacks yet?
No, we've experienced absolutely no cutbacks on any projects whatsoever. In fact, we've only heard of one project. It wasn't a project that was awarded to us. It was, in fact, at bidding stage. One project that was canned. Other than that, nothing that we're aware of has been put on hold.
But the potentials that are on the horizon, have you been getting the same kind of steady through of new projects as you had, say, 6 months ago?
Yes, most definitely. On the mining and infrastructure side, yes, most definitely.
So who's doing that? With these commodity prices, the levels they're at now, we hear that gold mines, half of them will go out of business, half the platinum producers can't actually produce at these levels. Who's actually going into new mining projects?
Well, let me make it maybe pertinent to this point to say that we work for blue chip client, a blue chip client base only, and even in the platinum project, certainly seen nothing slow down, nothing soften yet. On the coal side, obviously, and that's probably more our focus because we believe that's more sustainable. Again, that just seems to maintain its level.
So your intelligence is telling you that there's no problems yet, that the miners, in fact, are continuing as before?
Yes. From where we sit and what we see, our bidding process would be the first red light for us, and we certainly don't see anything.
As far as the public sector is concerned, any cutbacks there?
No, not definitely not in the public sector.
So why, David Shapiro, are all the construction companies under pressure? Why are their share prices, and particularly this one, Protech's share price is down by a third?
I think there's worries.
Sorry,
number
to a
one,
third of where it was.
I think the big thing, and it's something that you've always raised here, is dividend flow. There are no dividends, even though the shares are trading at very low PEs. I think in this kind of market, investors will seek dividends. So 1 or 2% dividend yield is not very attractive.
Well, you don't pay any dividends at all. Are you considering changing that, Gerald?
Yes, we said when we listed that we wouldn't pay a dividend for the first year at least. And we've decided that once we get our gearing back to about 70%, that we would then consider dividends.
Because if you can make in the second half what you made in the first half, then you are trading at an earnings yield of over 25%.
Yes.
And that's pretty juicy, or in David's terms, 4 times last year's earnings.
Yes.
The price earnings. And I guess the only thing that will really get the stock going, Dave, is if dividends start being paid?
I think dividends, and also a view that there aren't going to be cancellation. I think there's very big concerns. It's a global concern that a lot of projects will come down.
I still keep getting the feeling that South Africa hasn't really
No.
realized what's going on elsewhere in the world. You know, even the first boot hasn't dropped here yet. Elsewhere, both of them have dropped.
Well, I think you're starting to see it in the PMI and the Purchasing
Sure.
Managers Index. You know,
But
giving you an
Gerald's,
indication. Yeah.
Gerald's right on the sharp end. He would see whether or not people are cancelling projects,
You know,
and they aren't.
I think there was a small company out, Ansys, today, where they went into negative territory mainly because of delays in government, the granting of government projects. So I think there are concerns building up, but the longer Gerald continues to produce better profits, someone will wake up and say, hold on a sec, this is very cheap. But I think as an industry, people are very
Gerald,
cautious.
you still happy that you listed?
Yes, most definitely. I mean, it's certainly the markets haven't been too much fun, but you know, we can't focus on the markets. We can't focus on the share price. We've got to do what we have to do, and we keep our heads down and do it, and hopefully do it well.